Hey digital investors, welcome back to another video where we go over everything that is happening inside of the crypto space. We have a lot of good stuff to go over today. Going to try to keep this quick and not drag it on any longer than it needs to be. We have some good news to go over today. If you guys are frequent viewers of the show and you'd like to show some support, then make sure you tap the like button. It helps a ton to push this video out to more people in the YouTube algorithm. And also make sure you subscribe if you want to stay updated on everything that is going on inside of the crypto markets. Appreciate all you guys watching, all of your support. And with that said, we are going to hop into it. From speculation to allocation, the crypto markets are seeing a paradigm shift. And this goes over some data that we are seeing more and more, and the narrative around it is starting to strengthen. There's a paradigm shift from pure speculation to tactical allocation in the crypto market as new investors just as investors are locked in an accumulation phase and are holding their positions with a medium to long-term view. This trend is also highlighted by the amount of coins left on exchanges, which is experiencing an accelerating downtrend. The investor landscape is very different, with a blend of financial services companies to catch up with the growth of the digital asset ecosystem and other corporates exploring digital asset exposure in response to monetary inflation. The previous bull market cycle in 2017 was led first and foremost by retail investors. The market is sending some interesting indications that digital assets are in the early phases of a 12 to 24 month bull market cycle, itself part of a bigger, longer, multi-decade super cycle. This is pretty interesting because I've heard some talks of super cycles, right? Some people think at some point they're coming, and from what I've seen, a lot of people, I would say, think that we are in one now. They say this is the super cycle, or they say that the super cycle will be the next cycle. Who really knows, right? All we do know is that we are in a cycle. We know that we operate in cycles. If we see this elusive, right, this expected super cycle, so be it. If we don't, I think the cycles we already experience are quite enough. I literally wouldn't even be able to begin to comprehend the gains that would come out of something like a super cycle. That would be insane, but I definitely wouldn't complain. If we're going to see some type of super cycle, I definitely won't be complaining, not one bit, and I'm sure you guys probably aren't either. So for 2020, the company's CEO forecasts two major trends. He says the grand awakening from global investors and corporate treasurers to the role of digital assets in a portfolio, and a more avant-garde trend which will see high alpha generator bets at the edge of innovation, like a DeFi, NFTs, Web 3.0, identity, and prediction markets. During this latest sell-off, the average spent output lifespan, or ASOL, fell dramatically and back to levels before the Bitcoin accumulation range between 50,000 and 60,000. This indicates that long-term holders did not panic sell and capitulate, and instead primarily hodled through the dip. Let me know in the comments below, if you hodled, how long have you been actually hodling Bitcoin, or how long have you been inside of the crypto space? Because all the data that I have seen matches up with this, where most people who have been here for a long time, long-term holders, they're beginning another accumulation, whereas to most of the Bitcoin that is being sold on exchanges is mainly from new investors. So it's almost kind of to be expected, because new investors, say investors who have gotten over the past 6-7 months, really ever since the March crash last year, all they know is up, right? The crypto markets have only gone up. And so this is the first major dip that they have gone through. And it's expected that they would probably sell, right? Probably just like, much of us when we first got into crypto, we're buying, we're selling, we're not really knowing what we're doing. But ultimately, I think over the long term, all these new investors, as they become educated and as they start to learn the game and how this cryptocurrency game is played, and they'll become more educated, and it will lead to a stronger wall of long-term die-hard holders who look to accumulate at low levels rather than panic sell when things get low. Because if you panic sell more than once, twice when things get low, you have to reevaluate what your strategy is, right? Because when there is blood, that is a time to buy. It is never a time to be selling. So as seen in ASOL, the total amount of lifespan that is being spent has actually fallen at or below 2020 pre-bull market levels. This confirms that old coins are holding on to their stack, and the majority of spending is by holders of relatively young coins. What these three metrics indicate is that older hands are not rushing for the exit. The chief economist at on-chain analytics firm Chainalysis said that at least 3.2 billion US dollars worth of Bitcoin was sold during the sell-off. That's the largest 1 week US dollar loss of all time. Almost all of this loss was incurred by Bitcoin held between 4 and 13 weeks prior to being sent, meaning that most of the sellers were recent investors. That's crazy. So we have the largest 1 week US dollar loss of all time, and almost all of that loss was incurred by Bitcoin that was only held between 4 and 13 weeks. That is pretty crazy. That shows that the new investors are the ones who are selling, and older investors, right, or long-term holders, the OGs, they are stepping up to buy right now. And that's one thing that we've been talking about inside the Patreon. Been telling you guys inside there. If you guys haven't checked it out, check the link in the description. We go over a lot of things that we don't go over here. But yeah, now there's a lot of coins that are back in buying territory. There is a lot of fear in the market, right? As you can see here on this fear and greed index, the sentiment is very low. We are in fear. We've been in fear for a while. Prices are starting to rise now, but ultimately, the cheaper we see things go, in my opinion, it is that next reaccumulation, right? I think when we look back 6 months, a year from now, we won't see that this was the beginning of the downtrend, the beginning of the bear market, but rather it was the mid-cycle point of the bull market. So I'm very much still convinced that we are inside of a bull market, and I don't think that this bull market is over. It just doesn't have the indications that I personally look for, and that's just my opinion. Let me know your guys' opinions in the comments below. Love to read you guys' comments. Here we have UK bank Starling will lift crypto ban on June of 23rd. Starling is one of the UK's challenger banks and will roll out a new financial crime prevention system and lift its temporary restriction on deposits to cryptocurrency exchanges. So people who are banking with this bank could not deposit their money, right, into cryptocurrency exchanges. But now Starling will lift its restriction on deposits to crypto exchanges on June 23rd after testing a new financial crime prevention system. However, just 3 days ago, Starling suspended outbound transactions to crypto exchanges after having observed high levels of illegal activity. This suspension only applied to the faster payments option, which allows low-cost bank transfers at any time. Conversely, the spokesperson clarified that fiat deposits can still be made with Starling bank cards. Okay, so that's what's going on with Starling. Interesting stuff. We also have this Coinbase debit card now works with Apple Pay. The integration brings the crypto exchange's rewards heavy spending tool to the iPhones of US users, and additionally, Coinbase said in a blog it will begin offering cashback spending reward features to waitlisters this week. So make sure you guys hop on that waitlist. The card is available across the US with the exception of Hawaii, and a variation rolled out in European markets in 2019. The debit card works by converting users' crypto balances such as Bitcoin to fiat at the point of sale. So when you're using this debit card, you know who you're spending it with, they're not necessarily receiving that Bitcoin, but your Bitcoin will get converted to fiat at that sale, and they will most likely probably be getting fiat, allowing them to essentially pay with crypto at any card accepting merchant. Notably, it promises 4% rewards in XLM, which I think is amazing, right? 4% rewards, that's already pretty good, but then you stack it that you're getting those rewards with XLM. So if you were to even, let those rewards build up and hold that XLM, not only do you get that 4% cash back, but you're also going to get the appreciation of the underlying asset, which is XLM, and they're giving you 1% in Bitcoin. Most debit cards don't have a cashback program, let alone one in crypto. So I think that's going to be very, very attractive for people, especially all these new people who are coming in, right? We have all these Dogecoin fanatics who, really just they're new, right? They're just new. And, when they can get a debit card that's going to pay them rewards, higher than usual rewards in actual cryptocurrency, I think it's going to be very, very attractive. It's going to be hard to pass up that deal. We also have this Bitcoin price bull run starting to look like 2013 after record red monthly candle. And this goes over some insights. So they go over the stack to flow and they say it's still intact after the May drop. They say after it's dropped to 30,000 and several retests, concerns are starting to appear over the bigger drop. This would mean that for the first time, Bitcoin crosses the all-time high from a previous bull market, in this case from 2017. For plan B, however, it's an unlikely event. Moreover, recent price action is far from unheard of. In fact, it could just mean the market is rehashing its 2013 rather than 2017 performance. Uploading the latest incarnation of a stock-to-flow cross-asset S2FX model, he highlights similarities between 2021 and Bitcoin's behavior from years long past, mainly the drawing similarities between the Bitcoin cycle of 2013 and this current cycle rather than the Bitcoin cycle of 2017. And we must admit that this current Bitcoin cycle is not lining up with the 2017 cycle so perfectly, right? Obviously, it's going to be much easier when this bull market is all said and done. We have our top come in. It'll be much easier to look back and see, what was it more like? But as of right now, while we are in the thick of the mess, it's kind of hard to see, right? So they say it's starting to look like 2013 S2FX model intact, and they go on to say new all-time highs are still in play. The S2FX places Bitcoin in multiple phases in which it goes from a fringe phenomena to a full-blown asset class. Its ambitious forecasts call for an average Bitcoin price of $288,000 during this current halving cycle, which runs between 2020 and 2024. So let me know what you guys think. Do you guys think 288,000 is a reasonable Bitcoin price for this current halving cycle? Let me know in the comments below. We also have some pretty cool stuff. Sheetz to accept Bitcoin and other cryptocurrencies this summer. I've been on a few road trips this year and stopped at many Sheetz. And they're a pretty good gas station. I like them. They're not that bad, right? They're pretty big. There's a lot of stuff in there. Kind of reminds me of Cumberland Farms, but you don't have Cumberland Farms everywhere. But anyways, these Sheetz guys, they're going to accept Bitcoin, which is pretty cool. Sheetz customers will soon have the option to pay for their food and gas with cryptocurrency. The convenience store will accept Bitcoin, Dogecoin, Litecoin, Ether, and other forms of crypto starting this summer. Plans are in the works for crypto to work at gas pumps later on this year. They'll be partnering with digital payment company Flexa to make this possible. Now, whenever I'm on the road, while I still will stop at Sheetz if I find one and need to fill up, I probably won't be handing them over my cryptocurrency though. I will probably be paying with fiat. See, that's the thing. Even when Bitcoin and cryptocurrencies are full wide scale adopted, you can buy things with them. I think everybody else, sure, buy cryptocurrencies with them. For me, I'm just going to keep giving them my worthless fiat. That's just me, though. I'm sure probably 90% of you guys share that same sentiment. I mean, it could be convenient. Maybe at some point as prices stable out. But right now, with the volatility and the cycle we are in, I would never pay for something in crypto with where we are right now. DBS issues 15 million digital bond in first security token offering. Multinational Singapore-based bank DBS has issued a 15 million, and in US dollars this is 11.3 million, digital bond in its first security token offering. The DBS digital bond issued on its digital exchange DDEX. The bank was the sole book runner for the transaction, which was completed by way of private placement. Differing from traditional wholesale bonds, the digital bond will be traded in lots of 7,600 US dollars. DBS said the move paves the way for other issuers and clients to use DEX's infrastructure to efficiently access capital markets for their funding needs, and establishes a precedent of further STO issuances and listings. They say our maiden, and this is the group head of capital markets at DBS, he says, our maiden STO listing on the DBS Digital Exchange is a significant milestone, as it highlights the strength of our digital asset ecosystem in facilitating new ways of unlocking value for issuers and investors. Okay, so we're seeing the world move towards a blockchain-based cryptocurrency type of world. Prices for today. What do we have? Well, we have Bitcoin at 36,000, Ethereum at 2,500, Cardano is at $1.70, Binance Coin at 349, XRP sitting tight at $1, Dogecoin at 31 cents, Polkadot at $22, Uniswap at 26, and Internet Computer at 109. We also have Chainlink 29, Bcash 678, Litecoin 179, Polygon 184, and it is amazing how much this top 10, top 15 has changed just over the course of this past year, 2 years. It's amazing the new cryptos that we are seeing that are being ranked up pretty high, right? Looks completely different from how it did just a few years ago. And our fear and greed index for today is at 20. We are in extreme fear. So with that said, guys, that is the video for today. I hope you did enjoy it. If you did, make sure you tap the like and subscribe. You'll be notified each and every single time I put out a video if you tap the bell icon. I do appreciate all you guys who like the video, all of you guys who subscribe. It really does help a ton to grow the channel, and I really appreciate all the support that you guys choose to give. With that said, guys, I will see you on the next one. Have a great day, everybody.